Welcome back, passive income investors alike. Today, we're doing a at a glance. Welcome to the new normal. Guys, this is MedMen. Recently, I was in Vegas and we decided to go and try and find ourselves some products, check out some stores, and we came across these guys right here. And I want to analyze these guys because they're a little more interesting than you may have heard as well. A company called Planet 13, currently existing of one store. I'm going to talk about this one a little bit later, but first of all, I want to talk about MedMen here, ticker symbol MMEN. It's on the SNSX, so it's like a pink sheet kind of a stock, but I'm finding it super interesting. Here's a quick charting if you want to take a look at their history. Obviously, in the big marijuana boom, they hit quite a high, but lately, unlike a lot of the other ones, they have really leveled out. Looking at a $4.89 million market cap, though Google's market caps and PEs usually aren't terribly accurate. But let's just deep dive quickly into this company, guys. Just taking a look at their website, it's very clean, it's very well put together, and if you've been in the store, it's pretty impressive in and of itself. They kind of remind me of an Apple store, really clean, put together. I've heard some mixed reviews, but my personal experience was fascinating. People were very helpful and nice. The lineups weren't like this, but sure, it was still busy while I was in there. The fun thing is this company doesn't stop there. They continue to go on into apparel, which is another fascinating venue for themselves. Sorry, this is the wrong page for the apparel. There's the apparel. So the apparel is an interesting step up. I like companies that do this just to try and leak any kind of dime they can in between. I like that a lot. And if we want to see who the company is, and what they do, guys, for being a marijuana company, we started MedMen with a simple vision: cannabis as a consumer product. It is a simple idea with profound consequences for how marijuana is cultivated, produced, marketed, and quality standards matter. Best practices matter. Brand reputation matters. Today, MedMen is the most dominant cannabis enterprise in the emerging legal market industry, which is where my interest came to make a video on this company, because here in Canada, I don't think people realize that cannabis legalization has been so underwhelming and so destructively terrible because the government's trying to mandate and control the hell out of it, which means right now there's only going to be 20 storefronts, not a whole lot of any, guys, and the government's taking full reign control, which is really slowing the revenue growth, and it's really annoying when they say, oh, well, this company owns X amount of the legal market, when really they don't, because people are still buying from illegal dispensaries, which I may have mentioned in the past, which maybe I'll show you this one here that I've shown in the past videos. This website, there's tons of them, by the way, are all over Canada, and you can buy from these guys, and they're not the government, clearly, but you can order whatever you want, which is super interesting. Whereas in the U.S., where the U.S. is kind of slowly gaining traction on marijuana, you'll find that they are actually allowed private stores like these that aren't completely government ran, which is awesome, because essentially I think whoever gets to the forefront first is going to win. Again, a little bit expensive. When we were there, we found the prices abnormally expensive, which sucked. But at the same time, let's just keep going into this, guys. So we're going to look at, they also have a journal. That's funny. If you go into Ember, it's a journal, which is funny. They do a whole thing. Company's very well polished. It looks nice website. So this is the current stores they have. We have a bunch more opening up, which is really cool. Key West, Miami, Orlando, West Palm, really expanding. And you can just see we were at the one in Nevada. Where is this one? Right here at Paradise and Harmon. This was the store that we visited, which we'll show you right here real quick, because when we were in Vegas, we were staying just down the road here, and we witnessed this store, which was small but beautifully well done and reminds me of an Apple store. But yeah, so we can look at all the stores, guys. You're getting a lot of bang for your buck here, considering all these stores that are coming out. And as I mentioned, Planet 13 is another one of their competitors, but they are far behind on store locations. Planet 13 is the largest marijuana store, and it's got some, you know, almost like Guinness World Record stuff for it. It's a very clean, large store. Problem is there's not a lot of them, so it's more of like a nostalgia thing, where these guys might be, whereas these guys are more than likely going to be your local dealer. And again, I don't know in the States, it's probably the same problem. A lot of people are still buying it off the street because of the premiums it costs in store. But at the same time, these guys aren't doing too bad. And we're going to get into their books in a minute here, guys. But let's just take a look at a quick article before we jump into the Q1s, 2s, and something else. I just found this really interesting. So really quickly, robust asset-based balance sheet, strengthened large talent pool, lay foundation for continued growth. This company has really dinged me in a lot of different ways because, first of all, they're going to be at the forefront. They're actually making tons of stores. Like, I mean, again, just because I didn't mention it, the amount of stores here that are open already and running, we can't even open this many in Ontario yet. It's kind of funny, really. There won't be this many. So anyways, let's go back over here real quick and read this. So an annual and fourth quarter revenues of $39.8 million and $20.6 million respectively, led by California retail stores posting 6.2 average sales per square foot, 84% conversion rate for the fourth quarter. Beauty foul. Entering fiscal 2019 with leading U.S. market positions with 12 states, 67 retail stores, and 14 factories. It's nice that they also fund themselves, guys. Beautiful thing to see right there is that they make it, they produce it, package it, and sell it with pending. The company's first cannabis product line, which is focused on categories that represent 90% of the product sold in MedMen stores, raised over $250 million in gross proceeds through capital markets and financing activities since RTO in May. So let's really quickly, I'm not going to go over all of this, but this company really sets some dinging off in my head because I find this company to be a little misunderstood. We're always paying attention to the large companies, but the large companies I don't think have the positioning that this company does, getting their name out there and being on the street early because drugs sell themselves, and I paid for part of their financials as of this year, considering I was in their store. So let's go through their financials. Guys, the funnest part of this entire video, in my personal opinion, you might find it boring, but this is what we're going to learn and drop some knowledge. First thing I love to look at, total assets. Bada bing, bada boom. What an increase. So we got December of 2019 compared to June 30th. The assets have wildly increased. So total net asset is around $500 million, which isn't terrible. That's a lot. $500 million company here, guys. Not like Canopy, with a total liability of $174 million. So asset to liabilities looks really nice, which I think comes from shareholder equity, because you can see the massive amount of shareholder equity, which means this company is mostly held by shareholders, which is a good thing. Our total shareholder equity, yeah, it's definitely a good thing that shareholders mostly own the company, but assets, which seems to probably have a lot to do with cash as well, is a nice thing to see. Really healthy asset to liabilities, guys. Like seeing those kind of numbers, and that kind of just fascinates me because most of the marijuana companies are either flat. I think, don't quote me on this, is it Aurora Cannabis that just became profitable, which is a nice thing to see as well, selling through the Ontario government. Don't get me wrong here. This is where things get really confusing for me, and I need to know what you guys think of this, because these numbers are absolutely staggering to me, and I want to make sure I'm not getting into this wrong. So when we're looking at the 3-month end and the 13-week end, these numbers are insane, guys. We're talking about cost of goods sold, and then the revenues bringing in a whopping gross profit of $13 million in the first 13 weeks ended, which is quite incredible in my personal opinion. And by the way, did we read that the conversion rate's crazy, man? But that's almost 50% return, guys, on that's almost a 50% gain after gross profits, after cost of goods sold. So the 50% margins are insanely healthy. We had a net loss and comprehension loss attributed to MedMen Enterprises Inc., which was about 18 million by the looks of it. But this balance sheet, all in all, guys, just blows my mind. Can you guys do me a favor and just do a deep dive into this? Because I'm thinking about maybe picking some shares up in it, even if it's not a lot, maybe if it's even like $1,000, because looking at it in my trading account here, I mean, it's not that expensive of a company. You're getting it at a really decent market cap. I mean, the PE on it can't be much more than like somewhere between 30 and 50 would be my guess, unless I'm horribly wrong about this balance sheet, which is why I'm hoping you guys are going to help me analyze this a little better, because I've always wanted to see, I always thought the company that would win in the marijuana game would be the company that was just branding. The sooner branded, the better. Canopy tried it. The government shut them down. They had Snoop Dogg, all this stuff. The branding was beautiful. Now they're trying to do this kind of half correlation and with Martha Stewart or whatever, and they're just trying to pick up some hype, and it's the only way they can do it. But they can't legally brand and sell branded products like Snoop Dogg had, because he had a license for 5 years to sell it through Canopy until the government shut him down, which sucks. Whereas MedMen are opening stores left, right, and center currently, anywhere and everywhere they can to get that branding and that name out there, and they're doing clothing, and oh my God, this company just it gets my stomach butterfly feeling, because when I think about what I want to see in a marijuana company, considering they do this from start to finish, everything from the growing to the selling, it makes me very giddy inside, to say the least, guys. And I want to know what you think, because this is a fascinating company to me. And just as a quick side note, because I've just kind of talked about this in and out here, is Planet 13 is one I've been paying close attention to, because as of right now, it's definitely one of the bigger competitors in Vegas. I didn't get a chance to look at this one because it was a little bit more off the strip toward Wynn Resorts, and I'm just finding it interesting because they are really jumping the gun on getting a different kind of quality products. Again, things we just can't get away with here in Canada yet, guys, which sucks unless you're buying it illegally, which again, most stoners are. But this company here is probably a little bit more pristine, in my opinion, and it does crazy sales, considering, again, it's in one of the most touristy places ever, and it says it's bringing in like 1,500 or something people a day, which is absolutely insane. But this company overall, same sort of deal, merch, whatever, but it's their store locations, which again, you'll notice up here, you have a hard time finding some basic information about them, because currently this is their only store, and they're trying to open up a few more, but they're falling behind, in my opinion, compared to MedMen. So essentially, I think you're getting a better deal overall, because the store does very, very well, makes their books look really good, but at the same time, they're just not expanding as much, and I don't think they're going to do as well for an OTC stock as MedMen might. Now, you got to remember, when I was buying Canopy Growth Corp, guys, I was buying this company when essentially it was an OTC stock, guys. I was buying Canopy for a few bucks, and now I don't want too much to do with it. I do own it through Constellation Brands, but I think I'm going to be more interested in finding a smaller company that I think is going to do very well for sales in the future, and the way they are expanding, it interests me, and I want to know what you think, because I think if we do this together, we will get better results. Let me know what you guys think. Stay cool, stay super awesome, and I'll see you soon.